In trading and technical analysis, one of the most fundamental concepts that every trader must understand is support and resistance levels. These levels act like invisible barriers in the market, helping traders predict potential price movements. But what exactly are support and resistance, and how do they work? Let's explore this in today's session. Welcome to PayFunds Academy, the educational playlist of our main channel PayFunds, where we provide you with authentic and knowledge-based information about cryptocurrency, trading, and financial markets. Our goal is to equip you with real knowledge so you can make better trading decisions. Support is a price level where an asset tends to find buying interest. In simple words, when the price falls to a certain level, it often bounces back up because traders and investors see it as a good buying opportunity. Support acts like a floor that prevents the price from falling further. On the other hand, resistance is a level where the price struggles to move higher. When the price reaches this point, selling pressure usually increases because traders believe the asset has become overvalued at that level. Resistance acts like a ceiling that blocks the price from rising further. Traders use these levels to identify potential entry and exit points. For example, buying near support and selling near resistance is one of the most common trading strategies. When a support level is broken, it often turns into a new resistance level, and when resistance is broken, it may turn into a new support level. This concept is known as role reversal. There are different ways to identify support and resistance. The most common methods include using previous highs and lows, trend lines, and technical indicators like moving averages, Fibonacci retracement levels, or pivot points. Each of these tools provides traders with more clarity about where the price might pause or reverse. However, it is important to remember that support and resistance are not exact price points, but rather zones or areas. The market can sometimes go slightly beyond these levels before reversing, so traders should always use them in combination with other confirmations. In summary, understanding support and resistance is a key skill for any trader. These levels provide valuable insights into market psychology and help you make more strategic trading decisions. By mastering them, you can better manage risks and increase your chances of success. That was today's topic. Support and resistance levels in trading. If you found this helpful, don't forget to like, share, and subscribe to our channel for more authentic knowledge about crypto and trading. And remember, PayFunds, your keys, your crypto, your freedom.